Hey everyone, welcome to this week's video update. Today is Friday, April 7th. Don't forget to join us Monday morning at 8:25 Central, right before the market opens, where we stream live from our Facebook page and YouTube channel. And by the way, if you have any suggestions on topics you'd like me to cover, or specific trading strategies, or specific trades in general, shoot me an email, and I'll try to cover them this week. So our first trade on Monday was actually our trade of the week that we did stream live, and that was in ticker symbol SNAP, which is Snapchat. So remember, on a stock that just recently IPOs, like Snapchat did just a few weeks ago, it's only been trading for a few weeks. So the IV percentile and IV rank indicator is not going to be available, because remember, that measures IV against the last 12 months of trading, and it hasn't been trading that long. However, what we do know about newer stocks is there's still a lot of uncertainty. They haven't even had their first earnings announcement yet, so the premium is going to be extremely rich. So what we did is we put on a straddle, and you could have done a strangle and gotten a little wider, but on low price stocks like this, I mean, it's trading in the low 20s. I like to do straddles because you collect a decent credit. We collected about $4.40 on this trade. It's moved slightly down on us here. So nothing to do here, not enough profit to take off yet, but we're going to be managing this quickly. In other words, we want 25% of max profit, so we want to take this off for about $100, $125, something like that. So nothing to do there yet. Next trade we made was a closing trade in an iron condor in wheat. Closed that for a nice profit. Wheat had a nice move up that day, gave us the opportunity to take that off for a nice profit. Next trade was a rolling adjusting trade in EWW. So what we did is price had moved up past our break even, so we needed to roll the puts up. But with the April expiration only 20 days left, or around 20 some days left, we went ahead and rolled that out to May as well. So if we take a look at EWW, We've got two different positions on in here currently. So we've got one with 5 contracts and one with 4. So here's the one with 5. It's continued to move up. So and that's the one that's still in April. So next week we will look to potentially roll that whole spread. Maybe roll the puts up in that one, and roll that entire spread out to May as well. The one that I just mentioned, the one that we already rolled to May, is right here. So again, since we've done that, price has moved up again. So we may have to roll the puts up again and continue to monitor and manage that. Or if EWW moves down, we'll take that off for a nice profit. So stay tuned on EWW. Next trade was a closing trade in EWZ. We had a strangle on in EWZ. We closed that out for a nice profit. Got a contraction in IV, and price cooperated. So we're able to bank a profit there. About 40% of max profit. Next trade was an opening trade in XLF, and we sold a straddle in XLF. The IV percentile got up to 54 on that day. So if we take a look at the platform on XLF, you can see it's moved up slightly on us. So, but we're still fairly centered, so nothing to do there. Again, another example of XLF is trading for $23.50. So not something I'm going to do a wide strangle on, because you just don't collect enough credit to give you that bang for the buck. So I like to do straddles, and if this keeps moving, if it moves outside of the break even, then we may roll up the put side, and I'll probably, assuming IV is high enough, I'll probably add another straddle to continue to widen out those break evens. Okay, so look for that next week if XLF continues to the upside. Next trade was a closing trade in TLT. So originally we had a calendar on in TLT, moved up past our break even. We added another calendar to adjust, and then price stayed in a very tight range in TLT, and it was very centered, and with only, at this point, there was only 15 days left to expiration. So we went ahead and took that off, wanted to take off a profit. Remember, after you adjust a calendar, or really any trade, you're a little bit more in defensive mode at that point. So you're not necessarily trying to go for the original profit that you were, but we still made a 10% profit on both calendars together. So nice little trade there. Not as much profit as we wanted, but we were able to get out of that trade before it got too close to expiration. So it's a good trade there. Next trade was a closing adjusting trade in natural gas. So I sent this out in two separate alerts. The first was we closed out the natural gas strangle, and we wanted to roll that from May to June. So price had moved up, so we were not only rolling up the puts from 2.7 to 3.2, but we also rolled it from May to June. So I sent that out in two separate alerts. One was closing the trade, and one was reopening the new strangle in June. So if we take a look at what that looks like on our risk profile graph, let's see, that's actually a different ticker symbol for the new expiration cycle. So it's going to be NG. Let's see, where's my natural gas? There it is. NGK7 was May, and the June contract is going to be NGM7. So we've got to, when you're analyzing that, you've got to use the correct ticker symbol. So we change that to NGM7. That'll give us the risk graph that we need. So you can see it's still very centered, and we just need some more time to go by, some more theta decay, and you can see we've got a large profit opportunity, nice wide range there. So continue to watch natural gas. If we look at the charts, you can see it's had a really significant move up, and we just want it to stay fairly range bound from here to profit on that trade. And then the last trade that we made today was an adjusting trade in XRT. So we kept the strikes the same. It was still fairly centered, but with just a couple weeks left until expiration, we don't want to be holding these naked positions into the last couple weeks before expiration, because that's when you're really taking on more risk than you get rewarded for. So we went ahead and rolled this from April to May. IV percentile was decent. If we take a look at XRT, IV percentile earlier was in the 40s. It's down to 37 now, but still a decent position to have on with implied volatility pretty low across the board. This is kind of one of the highest IV symbols that we have right now to work with. So we wanted to definitely keep a position in it. So here's what that looks like now. Still very centered, collected more credit, gave us a much wider range to trade around in. And so we'll look to manage that profit when we get the opportunity. We still also have another strangle in XRT as well. Let me reset these strikes so I can show you what that looks like. So if we take off that one, we've got this one at 4 contracts and still very centered. So we haven't had to adjust this yet. Need a little bit more profit in that before we take it off. So if we can get a little bit of a contraction in IV and price to stay within that range, we'll probably be able to take that off for a profit next week. So those were all the alerts from the week. Let's go back and take a look at some of our other current positions. We've got an iron condor in soybeans. It's kind of down near the lower end of our range. Need a little bit of a move up and a little bit more theta decay, and we'll be able to take that one off. Wheat, we already mentioned we took that off. Apple, if we take a look at Apple, we've got this put debit spread on, so we're looking for a down move in Apple. Obviously Apple has continued to be strong, starting to show a tiny bit of weakness. Hopefully we can get a little bit of a down move next week, and if so, we'll take that one off. If not, we may continue to roll that to continue to keep that short delta in our portfolio. DIA, we've got a double calendar spread on, and you can see it's fairly centered. We're in the profit. We need an expansion in implied volatility. Remember, these calendar spreads, as volatility adjusts, it not only expands your current profit, but it expands your current profit potential and the width of your range. So really an expansion in implied volatility in DIA would really help our position there, and then we can take that one off for a nice profit. EWZ, took that one off. I mentioned EWW, we've got those adjusted strangles in there. GLD, we've got this double calendar looking for a down move and an expansion in implied volatility in GLD to profit there. FXE has had some nice high implied volatility. It's up in the 90 percentile. When we put this on, it was down in the 50s. So if we get the opportunity, if we get a price move kind of one way or another, and it's kind of moving towards one of our break-evens, I'll look to add another strangle with that high IV. I like to scale into higher implied volatility, so look for that next week. IBM, we've got this spread, vertical spread here, so we're looking for a move up. We added that for some long delta in IBM. IWM, we've got this iron condor, just looking for some more theta decay before we take that off. I mentioned Snap. SPY, we also got this iron condor on when we had that spike in implied volatility. Just waiting for some more profit and theta decay in SPY. TLT we took off, and then I already mentioned XRT. So this market keeps teasing us, gives us a little bit of a down move, and we think we're going to get some high IV, and then it just rallies right back up. So very strong, but I'd be really nervous if you had long delta in your portfolio overall right now. I'd really encourage you to add some short delta. You know, I think this market just feels really heavy. If we look at the E-mini S&P 500, you know, even with just these tiny down moves, we're getting these spike ups in implied volatility, which means the market is a bit nervous. And so I really like having short delta in my portfolio overall, kind of a bias to the downside. And so we'll see what happens next week. This thing could continue to rip higher, but a down move would really help us from our current positions and for some opportunity to put on new positions. So hope that was helpful. Have a great weekend. Remember to join us Monday morning at 8:25 Central for our live streaming and our trade of the week. And drop me a note if you have any suggestions or topics you want me to cover. Look forward to seeing you then.